Think of the Federal Reserve like the engine of the American economy. It's a complex, powerful machine designed to keep our financial system running smoothly, fight inflation, and create jobs. But what happens when someone tries to yank a spark plug out of that engine? That's what's happening right now, and it has the potential to shake the foundations of our financial system and affect every single American. I'm talking about the attempted firing of Federal Reserve Governor Lisa Cook by President Donald Trump. This isn't just another political headline, it's an unprecedented legal and constitutional showdown that challenges the very independence of our central bank. Let's break down what just happened, why it's such a big deal, and what it could mean for your wallet. First, who is Lisa Cook? She was appointed to the Fed's Board of Governors in 2022 by President Joe Biden, making history as the first black woman to serve on the board. Her term was set to expire in 2038. Yes, a 14-year term, and that's a very important detail we'll get to in a minute. So what does a Fed governor actually do? They are a key part of the Federal Open Market Committee, or FOMC, and the FOMC has one main job: setting interest rates. These aren't just abstract numbers. The interest rates they set, like the federal funds rate, are the foundation for the rates you get on your car loans, your home mortgages, and your credit cards. When they raise rates, it costs more to borrow money. When they lower them, it costs less. These decisions are crucial to managing inflation and employment. Which brings us to Monday, August 25th, 2025. President Trump announced that he was removing Governor Lisa Cook from her position, effective immediately. He cited, for cause, allegations of mortgage fraud, claims that were first brought to light by a Trump appointee, and referred to the Department of Justice. Now, Cook has not been charged with any crime, and she has publicly stated that she will not resign. In a statement, she said, "President Trump purported to fire me for cause when no cause exists under the law, and he has no authority to do so." That last part is the crucial element here. This is the first time in U.S. history a president has attempted to remove a sitting Fed governor. This is not like firing a cabinet member. A Secretary of State or a Secretary of the Treasury serves at the pleasure of the president and can be removed at any time for any reason. But the Federal Reserve Act is different. It explicitly states that a governor can only be removed for cause. Quote, what does for cause mean? Historically, it's been interpreted by courts to mean something serious and job-related like gross incompetence, neglect of duty, or illegal conduct while in office. It's a very high bar, and it's intentionally designed to make it nearly impossible for a president to fire a Fed governor just because they disagree on policy. This principle of for cause removal has been tested before. In the landmark 1935 Supreme Court case, Humphrey's Executor versus United States, the court ruled that President Franklin D. Roosevelt could not fire a member of the Federal Trade Commission simply because of a policy disagreement. That case set the precedent that officials in independent regulatory agencies, like the Fed, are insulated from political whim. So, why is this independence so vital? Look at the 1970s. During that decade, the U.S. was ravaged by high inflation, a problem known as stagflation. One of the key lessons learned from that era was that a central bank needs the independence to make tough, politically unpopular decisions. Think about it. Raising interest rates is painful. It slows the economy and can hurt employment in the short term. No politician wants that right before an election. But Fed Chair Paul Volcker famously made those decisions anyway, and he was able to do so because he was largely insulated from political pressure. He tamed inflation, but he did it at the cost of 2 recessions. It was a painful, necessary medicine that a politically motivated Fed likely couldn't have administered. So when President Trump says he has, quote, sufficient cause to remove Cook for alleged conduct from years before she was even appointed to the Fed, he is directly challenging over 80 years of legal precedent and a cornerstone of our modern economy. There's another layer to this. The attempted firing of Governor Cook, combined with the recent resignation of Governor Adriana Kugler, means there are now 2 vacancies on the 7-member Board of Governors. This gives President Trump the opportunity to appoint 2 new members, potentially shifting the balance of the board toward his policy preferences, especially on interest rates. Question: what is the, quote, dual mandate of the Fed? The Fed has 2 primary congressionally mandated goals: to achieve exclamation maximum employment and to maintain exclamation stable prices exclamation, which is usually interpreted as keeping inflation around a target of 2%. The Fed uses its control over interest rates and the money supply to balance these 2 objectives, which can sometimes be in conflict. Question: How will this affect my mortgage or car loan? The Fed's decisions directly influence the interest rates on loans. The attempted dismissal of a governor creates uncertainty, which financial markets dislike. In response to uncertainty, markets may demand higher interest rates to compensate for the added risk. This could cause interest rates on mortgages, car loans, and business loans to tick up, making borrowing more expensive for everyday Americans. Hugh, what is the difference between a Fed governor and a Fed chair? A. The Fed chair is the leader and public face of the Federal Reserve System. They are one of the 7 members of the Board of Governors and have significant influence over the agenda and direction of the Fed's policies. However, the chair has only one vote on the Federal Open Market Committee, FOMC, just like the other governors. The chair serves a 4-year term, but their term as a governor can last up to 14 years. Q. Can the president just bypass the Fed and set interest rates? A. No, the president has no direct authority to set interest rates. This is by design. The Fed was established as an independent agency to prevent political interference in monetary policy. This independence is what allows the Fed to make difficult decisions like raising interest rates without fear of political retaliation. The current situation is a direct test of that independence. Q. What happens if Lisa Cook wins her legal case? A. If a court and potentially the Supreme Court rules in favor of Lisa Cook, it would send a powerful message. It would reinforce the legal precedent that Fed governors are protected from politically motivated dismissals. This would strengthen the Fed's independence and likely reassure financial markets that the institution will continue to operate based on economic data, not political pressure. Context: the impact on the American people. The dismissal of Lisa Cook isn't just a political drama, it has real, tangible consequences for you. The Fed's independence is directly linked to the stability of the economy. When the Fed can make unpopular decisions, like raising interest rates to curb inflation, it helps to maintain the long-term health of the economy. If the Fed's independence is eroded, it could become more difficult to fight inflation, potentially leading to a return of the high-price, high-unemployment environment seen in the 1970s. The current legal challenge is a showdown over whether the most powerful economic institution in the world will continue to serve the long-term interests of the economy or become a tool for short-term political gains. Your ability to get an affordable mortgage, a stable job, and for your savings to hold their value could all be impacted by the outcome. This raises a critical question for all of us. If a president can simply fire a Fed official for a reason unrelated to their job, what happens to the Fed's independence? Could it become a political tool? Its decisions guided by the election cycle rather than by economic data? The legal battle that is now beginning will likely go all the way to the Supreme Court. The outcome will not only decide Lisa Cook's fate, but could also redefine the limits of presidential power and the future of our financial stability. The Fed's independence is a delicate balance. It's designed to protect our economy from the very political pressures we're seeing right now. Whether that protection holds up in court remains to be seen, but one thing is clear: the stakes couldn't be higher. We'll be following this story closely and providing updates as they happen. If you want to stay informed about what this means for your money, be sure to subscribe to our channel. Thanks for watching.